Joining us now to discuss the crypto markets is CoinDesk Indices Managing Director of the Summit is Jodie Gunzberg. Welcome, Jodie, to the show. So take a look at that. We've got Bitcoin in backwardation, some potential accumulation going on. Now, is there some possible positive sentiment for Bitcoin? And if so, where could that possibly be coming from?
There can be some possible positive sentiment for Bitcoin, but I think what we're really seeing is the majority of the sell-off has happened from the high inflation and the interest rates, and now we're just seeing really low volatility. And because of that, we're seeing a massive shift in strategy from volatility trading into sector trading. And with that, there can be more opportunities beyond Bitcoin. So not necessarily bad for Bitcoin. I think as the entire digital economy grows across the sectors, Bitcoin will too.
And when you say sectors, I guess what's the strategy there for, and you speak to a lot of investors, and so what kind of crypto sectors are they most interested in? What's the trend you're hearing most about?
There's 6 major sectors that we define in our digital asset classification standard. So focus is on those 6, things like currency, smart contract platform, DeFi, computing, the culture and entertainment, everybody loves those NFTs, and digitization. So those are the 6 main sectors, and within that, a lot of the traders, hedge funds, institutional investors like to look for strategies that generate alpha opportunities, so they go long and short according to the correlations and the returns in those sectors.
Speaking of sectors, you were speaking at I.D.E.A.S. Your panel was a holistic look at the digital economy's segmented industries. Also, you have brought with you some charts. We've got the CMI sectors are less correlated than S&P 500 sectors. What are we seeing there?
What we're seeing is that because of the broad use cases in the new digital asset economy, we're starting to see differences in performance. So we see a lower correlation between each of the 6 crypto sectors to the other sectors than we see in most equity sectors. So in 11 of the equity sectors in the S&P 500, there's 8 of them that actually have higher cross correlations than in any of the crypto sectors.
And how do you interpret that data?
The way that we interpret it is 2 ways. One is for risk management. So the lower the correlation, the more opportunity there is to achieve a certain level of return for a lower risk. Or we can interpret that as performance behavioral differences because, again, the technology and use cases of the crypto applications are now different. And in the equities, we see higher correlations because they're so highly correlated, driven by the macro influences, like the interest rates are still driving them, whereas right now it seems like it's not really impacting crypto anymore and it's shifted to the fundamentals.
I'm taking a look at the next chart, the sector return range greater for CMI than S&P 500. What are we seeing there?
What we're seeing there is that the range in the S&P 500 sector, so that's the best performing sector to the worst performing sector, is only about 20% in the last 30 days, as opposed to in the crypto sectors, you've got almost 32%. So there's a much wider range to play from in the crypto market than there is in the equity market, so much greater field for richer alpha opportunities.
Okay, interesting. You know, earlier I spoke to Franklin Templeton CEO Jenny Johnson, and we talked about, getting into space. They are launching some SMAs, new products there, and here's what she had to say.
The fact that Bitcoin and Ethereum trade exactly together when they're 2 completely different strategies just shows you the lack of understanding in the market in this space. And so, for me, I'm 3rd generation at Franklin Templeton. My job is to ensure that the 4th generation and the 5th generation, that we've survived 75 years because we know how to adopt our business to new technologies. I look at this and it's just a massive disruptor to financial services, and so we have to be in this space, and it's a great opportunity to be in this space. It's a complicated space, and we probably won't see the payouts in this space for 5+ years, but you have to really understand it to ensure that you're developing products that make sense.
So Jodie, your reaction to Jenny Johnson this morning? We've got BTC, we've got ETH, two very different assets, but trading often similarly sometimes.
Well, there's no doubt that some of the investors don't fully understand the technology differences between Bitcoin and Ethereum. What we find is that they get very correlated with aggressive monetary policy. So if you look back in the pandemic when there was the easing, that's where the correlation spiked and held steady. This time around, now the Fed reversing and tightening really aggressively, hot inflation, tightening rates. We saw very high correlation at 0.95 for some time. And just in the last month, as the selling is exhausted, they've departed now, dropped correlation from 0.95 to 0.66. So I would argue that there are a lot of investors that do understand the difference and that they don't always move together.
Okay, very interesting thesis there. You know, so there has been a lot of talk about, so Bitcoin right now is still down 60% year to date, but low volatility, as you mentioned, compared to stocks, even bonds, analysts are saying. And so what do you think about that difference, as there is also some strengthening investment in the U.S. dollar we're seeing? And so, maybe the volatile, at least traders who like volatility, maybe that trade is better spent in stocks, in other risk-on assets.
Yeah, the volatility of Bitcoin, again, at its very, very lowest, just snuck under the levels of volatility in the stock market. So even for high volatility in the stock market right now, Bitcoin just went under it. So there's volatility there. It's still at about 30% annualized, which isn't no volatility. It's just not the 150% that it used to be. So there's opportunity there at the low levels. The fundamentals are overtaking the technicals right now. And I think that for a long-term opportunity, it could be a really good time to buy.
Jodie, just one last question before we wrap, 30 seconds, but how long do you think we'll be stuck in this narrow trading range with Bitcoin?
I think that this could be a while, and I don't know that it will turn around until either something that's fundamentally driven pushes it out of that range, or the Fed starts easing again.
Which we never know when that might happen.